Alrighty, hello once again, everybody, to another daily plan. I'm your boss, Joe Boss. And man, oh man, did we have a pretty fun session last night during the London session, and even here, even early on in the New York session. Look at these rises, my man. Traders trim wages for ECB rate cuts. They see 70 basis points more worth of easing this year. So we have a more dovish expectation for the Federal Reserve, which brings weakness into the US dollar, and we have some more hawkish expectations, generally speaking. That's still technically 3 more rate cuts, right, for the ECB, and the ECB is cutting from a lower position right now. It's roughly around 2%. We're going to go ahead and ignore that alert for the moment, but it's on the Aussie, so we won't ignore it. We're going to go ahead and check it out. So we have movement on the Aussie. Alrighty, good stuff. Like I said at the end of the Trump address, we'll be reviewing it this morning. And one of the things that I said we would review is whether or not the risk on came. What I called for at the end of the stream last night was US dollar weakness today. And boy, oh boy, was I right. And boy, oh boy, was it a smart decision to flip my trades. If we go over to dollar CAD now, I haven't even totally checked it out yet. It was a smart decision to get out of all these long trades over here. Don't get me wrong, I would have loved to get out right here, but you can see what my expectation was. Effectively, given that, yeah, the tariffs got put on, we jumped up 100 pips, and then we got some news. The reason why it fell immediately after is because the Secretary of Commerce, Howard Lutnick, came out and said, oh, we are totally prepared sometime tomorrow, if Trump is ready, to announce some leniency on some of the tariffs that are more USMCA based, which is the trade agreement between the United States, Mexico, and Canada that replaced NAFTA during Trump's first term. Alrighty, give me a sec. I want to put on something here. I actually want to get into a short on this because breaking these lows is pretty good momentum. Alrighty, so that was just taken. Good stuff. I thought USD CAD would stay sideways here, but the fact that it's now moved finally in the last couple of hours, right? You can kind of see how long I've been waiting for this thing to actually start moving here. So now we got some good old-fashioned momentum. Okay. Let's see. Anybody watching so far this morning? Let's get the music back up. How about that? And turn it down to the right volume. Okay, nice background level of volume. Go ahead and say hi if you're watching. Always appreciate it. If you're on WAP, I'm watching the chat. And if you are on Twitch, Kick, or YouTube, I'll be able to see you here. And we'll be able to highlight some of your messages as well for any Q&A or chart requests. If you're interested in any of the indicators that we'll be going over later on the stream, you can find them here on my trading view. Some of them are private and invite only, so you won't see them. And some of them are public and invite only, like the probability pivots here. We can actually bring up the probability pivots. And again, it's important to set these drawing expectations, and I can delete this one next one. That's not necessarily an expectation. It's important to know what expectations are, so when you're wrong, and also what your expectations are when you're right, you know? The expectation here was just more or less a continuation of this expectation. The some new information came out, I had to change my mind, and now look what I'm doing. I'm doing the right thing. Okay. And also, there are free indicators here. There are also some good libraries that I'm developing, and I'm getting bug fixes in PineScript for, specifically the style library. And we'll be getting a new PineScript stream sometime later this week, so long we get that bug fix out. Alright. And if you have any stream requests, go ahead, join in on the Discord here at Plan the Profit. Link to the WAP is pinned in all the chats. So you can join the Plan the Profit Discord and hop into the trades forum and make requests, post trade charts, post your logs, post your results. And if you have any long form questions you want me to answer doing a stream, I can go ahead and answer them or cover them if they're just a longer form topic. So if we're doing something, let's say applying some kind of geopolitical analysis, this is the spot where everyone can share their take. And then we can go through it over on the stream and see how it goes. And then over here we have our research forum for all the major topics, including Trump Watch, where we're getting RSS feeds on Trump's Truth Social, and we're also posting any new information we get from, oh, we just got PMIs. I'm going to turn on the Squawk Chat. US S&P Services PMI Actual 51.
Bending.
Alright, we're listening into Financial Juice.
So from the report then, Chris Williamson, chief business economist, says the final PMI is an improvement on the earlier flash reading, but still paints a worryingly weak picture of services sector business conditions compared to the buoyancy recorded late last year. Current output growth has downshifted markedly so far this year from a booming rate of expansion in December to a disappointingly sluggish pace in February. Also, Bank of England's Taylor says that we probably have a bit more of an output gap than in the Bank of England's February MPR.
Alright, I'm going to bring out the two press releases we've got so far.
Bank of England's Green says monetary policy needs to remain restrictive, and recent news is uncomfortable for central bankers.
Gotcha. We'll pause that for just a moment. So these are the S&P Global PMI Services. This is the actual report. Let's go ahead and scrunch that in a little bit so we can make a little bit more headroom here. And also we'll scrunch that in a little bit. Yeah, there we go. So then we can read this, because this is kind of important. Chris Williamson, I've been following his commentary for a long time. So we're going to make sure we read what Chris has to say about the US services PMI here. And I believe this is the final. So there shouldn't be too big of a surprise. It shouldn't be a huge market mover. The flash PMIs are always going to be moving markets much more significantly than the finals, unless there's a huge divergence between the flash and the final. So let's go over this. Chris Williamson, chief business economist at S&P Global Market Intelligence, prior IHS Market, right? Been following him for that long. The final PMI is an improvement on the earlier flash reading, but still paints a worryingly weak picture of service sector business conditions compared to the buoyancy recorded late last year. So the commentary I gave earlier about hoping that services will stay strong so that then they can buoy any weakness in manufacturing, that doesn't seem to be the outlook here. Current output growth has downshifted markedly so far this year, from a booming rate of expansion in December to a disappointingly sluggish pace in February. Expectations, this is what we want, expectations for output growth have also been revised sharply lower as service providers have become increasingly worried over signs of slower demand growth and uncertainty over the impact of new government policies, ranging from the tariffs and trade policy to federal budget cutting. I'm going to do one thing here that's come to my mind. FOMC countdown. We're going to check this out real quick. Just accept all the cookies. I'm all good here. Compare. Oh, no, probabilities, that's what we want. And it looks like the odds have shifted slightly. Yeah, the odds have shifted ever so slightly in favor of making sure we get three cuts here. Again, a slowing economy means that the Federal Reserve can cut rates, and that would put downward pressure on the US dollar. A lot of times when we look at trades, we're not necessarily thinking about how the information today is literally going to be impacting us today. Not all the time do we have to do that analysis. Most of the time, a lot of the time, we have to also take into account how current new information is going to impact the expectations of events we have out into the future, like sometimes for the rest of the year, a couple months ahead, several months ahead. And that will set our longer term, more intermediate expectation of, okay, if the economic data in the United States isn't proving to be as strong as we expected, then we can lean more heavily on expecting, on increasing the probability or the odds for these rate cuts from the Federal Reserve. If the US economy was still very strong and had economic surprises to the upside, well, when the US economy is strong, the Federal Reserve doesn't necessarily need to tighten its monetary policy in order to rein in inflation from a hot economy. So as long as unemployment stays fairly well managed and unemployment doesn't skyrocket to insano highs over like the next 3 or 4 months, we'll probably stay with the expectation of 3 rate cuts. Otherwise, we could end up with, another rate cut, 1 or 2 more rate cuts if we get a rise in unemployment sometime during this year. However, it doesn't seem terribly likely that's actually going to happen. We already discussed if the Doge layoffs would actually count for this, and it seems like that's going to mostly be something that's counted in the second half of this year, a lot of those layoffs. Don't get me wrong, a lot of people have already been laid off, but it's actually not terribly insane. It's still going to show up in the economic data. But as long as those people can move and transition into the private sector, well, I know it's not totally reasonable for everyone who got laid off by Doge to go into the private sector after they've been working in the public sector for the government for, 10 to 30 years of their life. But I'm fairly certain most of those people want to eat and pay their rent, so they're going to do what they can to find another job. And with that in mind, the outlook's not terrible on U.S. employment. It's just there's going to be some volatility, most likely in the data if there is volatility, or we could have some kind of lagging effect between whether or not we actually end up with a lot of unemployment and then all that unemployment goes away. A lot of smart people are currently doing research on it in their outlooks, and you can go ahead and check out some of their opinions here in the Discord. And you can see we have the link to the BlackRock weekly commentary. Again, we're not copy pasting their product here. This is just a public URL that goes to BlackRock's site. This is RBC's site. This is Westpac's site. This is Danske Bank's site. So these are all outlooks that go and cover week ahead and outlooks for and month ahead outlooks and topic specific outlooks for various asset classes and economic themes. Very, very important to listen to the people who are actually managing serious AUM to find out what's actually going on. Also, I'm sorry for the people over on Twitch, but it seems like the stream is unstable. Bitrate's too high, yet the bitrate's at 6,000, so, and that's the lowest it can go, I think. So, sorry for that for you guys on Twitch. If anyone is watching, switch over to Kick, YouTube, or WAP, please. I don't know why I didn't change any of the stream settings from last night. Let me do a quick little refresh, check out all of the streams, make sure everything is hunky-dory. Yep. Everything is running super smooth. Alright, let's keep the show going. So with that bit of commentary out of the way, let's continue. The strong private sector hiring seen late last year has consequently gone into reverse, with a steep fall in backlogs of work hinting at further job losses to come. So we already have higher expectations of higher unemployment in the US. Great. And I'll turn down the music just a tad more. That should be good. Adding to the gloomier picture in February was a sharp rise in costs, which companies are often unable to pass on to customers due to weak demand. While this reduced pricing power is good news for inflation, it's potentially bad news for profitability. So inflation, not so crazy. Maybe this is not necessarily including tariff issues, but considering this is a PMI survey, I wouldn't be surprised if it did not actually include some sentiment about how inflation might be impacted by those tariffs. Alright, so that's the US side, that's the USD side of things. And then I have one more report here on the Canadian side of things, the Canadian Services PMI. So let's actually go to USD CAD. So now we have the USD side. So this chart going up means the USD is getting stronger, and the Canadian dollar is getting weaker relative to the US dollar. And this chart going down means the US dollar is getting weaker relative to the Canadian dollar. So down means the Canadian dollar is getting stronger. So over here, we just read this bit. It seems like things are slowing down in the US, but still okay. Inflation's not a huge problem. Employment might be, which would be nice environment for future rate cut odds to continue increasing from here if that trend continues. And now we'll get into the Canadian side of this. We are still looking for more information to come out here shortly. In about 2.5 minutes, if I go here to the economic calendar, yep, you'll see all of the ISM services PMIs are releasing here. So we'll keep this up on the side while we go through this. We're just looking for the comment section right here. So this is Paul Smith, Economics Director at S&P Global Market Intelligence. Notice how all these guys have Director of Economics, Heads of Research, Chief Economists in their name, right? These are the type of people you want to be reading commentary from. All right. February saw Canadian service sector, the Canadian service sector, hit hard by the specter of tariffs being applied to all goods and services crossing the border, with the US panelists widely reported that market activity had been paralyzed by tariff uncertainty, with clients unwilling to commit new business as they awaited to see the size and scope of any changes to respective Canadian and US policies. And that could change wildly again today. with whether or not Lutnick is going to prove he has credibility here. And we actually see comments from Trump sometime today on whether or not we're going to have some tariff relief on USMCA related goods, which would be, honestly, probably a very good first step towards larger negotiations to tariff reduction. But we'll have to see if Carney follows through on the retaliatory tariffs like he said he was when he was campaigning. And Carney is for those who don't know, Mark Carney is the Liberal Party's candidate for Canadian Prime Minister. He'll likely take over here on March 10th as the new leader of the Liberal Party. And as the Liberal Party is currently in power, that means he will become the Prime Minister of Canada, and he'll be the one communicating with Trump and negotiating with Trump on tariffs. Okay, we're going to get the ISM Services PMI here in about 15 seconds. I'm going to go ahead and turn on Financial
Voice
Juice.
news disconnected.
Let's go ahead and turn it on. Yep, there we go. We're good. And now we're going to watch how things print here.
53.5, 53.5, higher than the forecast of 52.5. US factory orders 1.7%, 1.7% as expected. The durable goods orders 3.2%, 3.2%, higher than the forecast of 3.1%. Core durable goods 0%, 0% as expected. ISM services prices paid 62.6, 62.6, higher than the forecast of 60.4. New orders 52.2, 52.2, higher than the forecast of 51.5. Did see a little bit of movement towards the upside on the S&P 500 and a little bit of positive moves for the dollar off the back of that data.
Yep, and I just hopped out of these trades.
ISM services employment rises to a 3-year high of 53.9.
All right, so hopped out of this for pretty much break even, and on USD CAD, or rather on Euro Dollar,
Bank of England's Pill says we do need to remain vigilant
got
to
out
new
over
shocks
here.
that might help its path back to 2% inflation.
Let's go ahead and check out the ranges real quick. Yikes. Yeah. Crazy, crazy, crazy moves. Yeah. When you have moves like this going on, there's pretty much momentum indicators. That's pretty much what you're following, and you're following news more than anything else. All right. And then we get a bunch of EIA data later on.
So Treasury's pair gains after ISM services rises unexpectedly.
Yep, that was the stronger dollar would have been the expected reaction also if the S&P PMIs came in like that.
And the ISM services report is out on the feed.
Okay, let's go ahead and check that out.
Also, factory orders prior revised to minus 0.6% from the original prior of minus 0.9%. Bank of England's Pill says echo effects from shocks are not totally disappeared. So then echo effects from shocks have not totally disappeared. Pill says evidence points against more rapid cuts in bank rate for me.
Yep.
And more work to do to squeeze out underlying inflation. US dollar slightly extends losses against the yen after ISM data, last down about 0.7%.
Yeah, a lot of pings, a lot of notifications on breaking news stuff. Breaking news, Supreme Court unblocks order halting U.S. foreign aid.
Bank of England's Pill says further progress on disinflation would permit further rate cuts this year.
Oh, that's Bank of England. All right. Let's go ahead and mute that for the moment. For a short little moment here, I have gone and taken a short on this because it seems like we're now getting an okay reaction. I'm going to be watching this pretty closely. And this is just an estimate of where I got it. Gotta go ahead and actually plop in the number here. And then I have quite a lot of trades to post into my trade logs thread today. So we'll see how well this holds up against, oh yeah, it looks like it's holding up pretty well so far. Let's go ahead and go through this. Report issued today. Do this quick reading through some of this stuff here. February was the third month in a row with all 4 sub-indices that directly factor into services PMI in expansionary territory. The first time this has happened since May of 2022. Slightly slower growth in the business activity index was more than offset by growth in these 3 sub-indices. Okay, so let's go ahead and not do this then. So that's like, what, 7, 8 pips? Yeah, not a big deal. Sucks to be hopping out of this maybe a little too soon, but when you see this and then you're like, okay, any good positive surprises to the upside could, help. I should probably recall that the S&P global PMIs, generally speaking, track better with economic data than the ISM does. Let's go ahead and continue on here. And if anyone's got any questions at the moment or any comments, I'm just going to go over here and see what people are saying, what these respondents are saying. Tariff actions have created chaos in information and pricing measures, forecasting, and forward buys, which may artificially inflate purchases to be followed by a drop-off. Okay, that seems like a pretty smart take. Let's check how USD CAD. Yep, USD CAD. It's responding. Oh, it's still doing pretty well here. So far, so good. Now the question is, how low will this thing go? Let's go ahead and check out the low odds here with the probability pivots. So let's see, from here to here. Oh yeah, we got some room. We got some room. I would be surprised if we went past S1. Going past S1, I'd assume probably like another. You guys can see this, right? How we have a using seasonal data, low probability spot right here. So that means going past this S1 pivot leads us into these higher probability seasonal areas here. So generally speaking, for the first week of March, generally speaking, moves below S1, very low probability of finding the low for the week between S1 and S1.5, and a higher probability of finding the low here between S0.5 and S2.5. This is roughly 30% of lows this week occur way down here. So are we going to be in one of those weeks? I'm not sure yet. When we cross S1, which is as simple as creating an alert here. So I'll create an alert for myself here, and I'll watch it. Right? I'll watch it. I'm not so sure we'll get that follow through. However, let's think about this for a second from what I just said earlier on in the stream. If Letnick comes out and is credible with his calls that we'll get some tariff relief today, I think that would be enough to at least reverse most of this move. We could probably see, prices back to these lows here, right? Also, isn't that nice? Not having to look to the left of the chart to set an expectation, right? I'm just looking at the indicator. I'm just looking at the probabilities, and I'm saying, okay, somewhere between here and here, if we see this tariff relief. And then a lot of people are going to be like, oh, but these lows line up and they extend out to these areas that you're looking at, Joe. The qualitative difference between what I did looking at this indicator, looking at these odds, understanding the expectation of what's going on with Letnick, and then setting an alert at this S1 is much more forward looking and I'd say properly reactive than, oh, let me look back in history and extend that information forward in time under the assumption that this point in history is going to be relevant at this future point in history. Right? Don't get me wrong, it's always well and good when a line, a price level looks good, but guess what? There's 50, 141, 142. You have the round numbers right here, right? So there's psychology around round numbers, So yeah. Hopefully we'll see Letnick follow through on this, and I'll be posting updates in my trade thread in a bit here. Just triple checking the chats, triple checking the streams here. All right. All's well and good so far. Just gonna double check a couple things here. Alright. All good. So a nice, more trading focused stream today. Great. Oh man, but man, do I feel good. I feel good about these trades here, my man. Oh, maybe I should be getting back into that euro, huh? I'm alright with taking an extra shot here, so let's go ahead and do that. Again, I'm just looking at this, I'm like, okay, that's a big fat red bar. So far on the 1 hour, things are going so far so good. I already took one shot at it, popped out because of the ISMs. The response to the ISMs wasn't as strong as I wanted, but now we're seeing follow through. Okay. maybe rate hike odds slightly decreased. Oh yeah, it's pretty much 50-50 at the next meeting. 50-50. Whether or not we get a rate hike or not. And actually, the odds just went slightly in favor of continuing the hold, 0.7. So a cut is at 48% and a hold is at 48.7%. So the odds are slightly in favor of a hold at the May meeting. And looks like a cut is the expectation at the June meeting, which frankly was kind of expected a couple months back, honestly. The question now is, do we get that cut in June? Does the economic situation in the US deteriorate faster to warrant that kind of move? And do we get commentary from Federal Reserve participants that also helps warrant that kind of move? Let's turn this up just a tad. Alrighty. Let's keep on going here with the ISM on the side. Implementation of tariffs will have significant cost impact to our projects. The majority of the capital equipment we purchase is not manufactured in the US, or components that we make the equipment come from overseas manufacturers. We are also seeing US prices already rise in anticipation, which is a similar reaction of the US suppliers when the previous tariffs were not introduced. Construction. All right. Universities are still digesting how federal assistance programs are changing. The last month brought multiple weather events. All right. Norovirus and other viruses have resulted in busy emergency departments and urgent care facilities. And then for information, tariffs are going to have a ripple down effect that could severely harm our business. Concern regarding tariffs, no impact yet. That's a very brief statement. Weather has been terrible, right? Affordability and high interest rates are still headwinds, but sentiment seems to be good for wholesale trade. Gotcha. All right, so nothing terribly crazy. Inflation in Canada on the rise, not so great. Again, a Bank of Canada rate cut is now fully expected at their next meeting. So, actually, let's check out Bitcoin. How is Bitcoin holding up? And then we'll also check out the S&P. Bitcoin has rallied quite nicely over the last 24 hours. And it rallied also during the London session last night. It's having a bit of a pullback here. Let's go ahead and check out SPX. Actually, let's go over here, equities, and use this one here. Yeah, a bit of a pullback over the last few hours here, especially during the London session. Yeah, so going into New York, we'll see if we get a risk-on reversal here in the S&P. Maybe this ISM report coming out relatively strong. It's quite mixed, honestly. Effectively, most of the outperformance came from a couple of sub-indices, those 3 sub-indices, and the rest are going okay, right? So growing, slowing, growing, increasing, growing, contracting. Yeah, nothing too too crazy on that front. Let's check out if there are any other assets on the move. Aussie looks alright. Aussie has been performing quite well, huh? Even though we have those 20% tariffs on China now, huh? Yeah. Alright, so we can close that. We don't need that open at the moment. And we can listen to Financial Juice in the background in case anything new comes down the pike here. We also had some Great British Pound news. Let's see how that's impacted things. Everything is holding up quite well. We hit this expectation down here, and man, was...
Bank of England's Governor Bailey says Germany has done something quite radical in the past day to boost domestic demand. Also, 10 minutes away from the bottom of the hour, we get the crude oil inventories data.
Check that out. Isn't that great? We'll go ahead and see how crude is moving.
Forecast for crude oil inventories is for a build of 0.8 million compared to the prior draw of minus 2.332 million. Gasoline inventories forecast is for a draw of 0.75 million compared to the prior build of 0.369 million. Distillate inventories looking for a build of 1.5 million compared to the prior build of 3.908 million. Crude Cushing inventories prior was a build of 1.282 million. So looking at the API data we had last night, API crude oil stock change came in at a draw of 1.455 million.
I don't know why it didn't catch your chat earlier, Ari. I see you. So you're short NU. Let's see here. You see
Bailey says imbalances are best addressed in multilateral forums.
Oh, that's right. We have an econ
The distillate yesterday as well came in at a build of 1.136 million. Cushing stock change came in at a build of 1.63 million.
Yeah,
And the gasoline stock change from the API came in at a draw of 1.249 million.
Yeah, pretty high probability of finding a high here, but seasonally for the month, a lot of the odds are skewed a bit higher to the upside. So I'd be cautious on, over the next, several days, frankly, because a move like this is quite strong. Let's check it out on the weekly. Oh, wow. Check that out. Wow. Isn't that crazy? Yeah, past R1, I would be more concerned, or more specifically, past this spot right around here. Reason being is that's where we get a peak in our range probabilities for finding the more extreme tops for a given week. Right, this little peak right here, and it seems like our current top is right around that spot. And then, of course, the
Bank of England's Bailey says it's essential that we don't...
I'll mute that for now. And past R1, sure, we could go a little past it, hit the top in the ranges, but I'd say past 57 for I'd have higher expectations of going up past and into or trading near 58. That would be my expectation. Also, this might be a longer stream today. I might just, because it's a more trading focused stream today, we'll go ahead and keep the stream going on maybe for a bit longer than normal. Maybe I can get the Twitch stream set up. But it's been a little finicky. I'll see if I can get it working some other time. But this way we can just hang out. Alright, can you send something else to see if I got the chat working alright here? Yeah, let's see. Yep, there you go, my man. Alrighty, my man. In a bit. Thank you for hanging out. Alright. Let's see how well Euro is holding up here. So far so good. It's just holding up. And peace with Russia and Ukraine is a huge boon, and considering oil prices are much lower, that will give Europe a nice little energy boost too. They can stockpile on stuff for not as crazy expensive as they otherwise would. Let's see here. I wonder if Berserker's here. You're gonna respond to a message here. By the way, one of the reasons why, just as a little bit of trading help, very frequently, if you listen to me and watch my streams, you hear me talk about Flash PMI. Let me go ahead and actually bring up the Blackboard and Epic Pen here. Let's see here. Blackboard. There we go. So very frequently you'll see me talk about PMIs. Let's see, is that a text? Yeah. Very frequently you'll hear me say something along the lines here. Can we make this bigger? Yeah, there we go. Way bigger. So, S&P PMIs. You have the flash, and then you have the final. The flash numbers move markets more. And the final numbers move markets if there's a divergence from the flash. So move if diverge from. Go ahead and there we go. So that's how S&P. And this is generally like, okay, that's how we interpret the S&P PMIs. Then you have the ISM PMIs. There's no flash. So they have an immediate impact when they release. Simple as that. Nothing terribly crazy there. And we'll now, let's see here. How do we leave the whiteboard or the blackboard? Oh no, I don't know how to leave the blackboard. Oh, that's the whiteboard. Don't get flashbanged. Okay, there we go. So yeah, the ISM numbers might not track economic data as closely or as with as high of a correlation as the S&P PMIs do, which is why a lot of people tend to try and focus on the flash S&P PMIs when those come out. generally, I think those are more important because they also cover more countries. But the ISM PMIs for the US specifically can be quite helpful, especially when those surprise to the upside. It's just the S&P PMIs cover a wider range of companies than the ISM. It's just the ISM includes, you could say, there's some overlap, and there are some companies that only report to ISM. So there's some extra information there, but personally, I prefer interpreting the S&P PMIs. So yeah. Alright, my man. See you in a bit, Ari. Have a good night's sleep. Yep, so nothing too crazy here. Let's go ahead and check out. Let's go back to that New Zealand. Check out what Big was looking at. Again, we'll see if, oh, that's right. Or step down, the chair of the RBNZ, the guy in charge of RBNZ policy, stepped down, and the deputy is now in charge. So maybe this econ meeting is going to discuss what's going on here. I'll be on the lookout for any outlooks from New Zealand banks covering the topic, that's for sure, on or stepping down. Let's check out the DXY here. Yeah, man, look at that. Wow, that has really exceeded my expectations. That has really, really exceeded my expectations. Yeah, we are in uncharted territory. We do not go down here. We pretty much never, ever really go down here. This is all super tail risk, exogenous shock stuff. Yep, but no bounced here once we crossed down here. Expectations stayed put. But that was, don't get me wrong, a lot of the data says, hey, the low's coming around here. So that's where I set my expectation. But man, did that exceed my expectation or what, man? Holy cow. Let's see if there's anything here on the month. Oh, there is. There actually is. There aren't any dots, though. I mean, we're going to have to increase this a tad to make this bound a little bigger to capture a bit more data here. Yeah, so there is a peak in the distribution right around here. So lows could be coming in a bit lower, so the DXY might have, let's see, how much more? DXY might have another 50 to 70, call it 80 points to move lower. So call it 104. Like, it could be easily on its way to 104 here. Might want to stay long euro dollar then, if that's the case, right? Thing with the ranges is that these aren't necessarily timing indicators, right? The dots help with timing. Also, you can actually see over here, there's a bunch of dots around this price range right there. Yeah, but these are much later in time, so maybe dollar does something like that, or something like that. We're gonna have to look at events for the week and the month ahead. Because remember, we're getting NFP at the end of this week. And if NFP isn't terrible, frankly, if NFP doesn't come in at like 80,000, yeah, if NFP doesn't come in at like 80,000, we're gonna be okay on the DXY side of things. Let's see. Anything else going on here? No, it doesn't seem like we have anything else coming down the pike here as far as economic data is concerned. Let's see here. I'm gonna check out YouTube and Right Side Broadcasting because they usually watch whatever is going on with Trump, and we want to know when he's going to speak or when Letnick. Oh, Trump's joint address response. Oh, that's from the Democrats. So the Democrats are currently responding to Trump's joint address. Okay. We don't need to really watch that. We just want to know when oversight hearing with sanctuary city mayors. What the? Come on, I'm trying to meet this. What? What's that on her forehead? That's not hair. Alright. I don't know what that is. But yeah, we'll be checking to see if there's any news on Trump coming down the pike here. Yeah, and this is like super far. Yeah. Yeah, man, this was so much fun trading this stuff here. Now we got down, down, down. Let's see, last time we had such a huge down move, we had a little bit of a bounce. Yeah, a little bit of a bounce. But those are after, those are the following day. Yeah. And now we're on day number 3 of big fat moves lower. And it looks like Euro is holding on here. Euro seems to be doing A-okay at the moment. Man, pound's doing exquisitely. Oh man. Looks like the Canadian dollar isn't seeing that much of a rebound. This is kind of the move I was expecting to occur over in the euro. Right? I guess we'll have to wait and see if the DXY actually holds up here or not. I'm gonna go ahead and call the stream here. It was a pretty chill stream. We went over some trading stuff, more trading focused stream. Yeah. Time to get on with the rest of the day, my guy. Alright, with that all said, I will see you all in a bit.